is my favorite day of the entire month. 4 stocks I own, where I get to share my 4 biggest investments in the entire stock market right now and why I am invested in these particular companies. I hope you guys really enjoy this. Let me know in that comment section if you actually own any of these companies. I would love to hear from you guys in that comment section. Let me know, and if there's anything I forgot to mention about one of these companies, let me know down there. I'd love to hear from you guys. Also, make sure you follow me on Snapchat and Instagram, especially Instagram. It's linked down there in the description. All right, guys, let's get into this. eBay. eBay is my 4th biggest investment here. eBay. Obviously, they're benefiting from people ordering more and more things online. That becoming more of a norm, right? Now, on eBay, they have a forward PE of under 17. They got about a 16.5 forward PE, so that is under what the market is trading at right now on a forward PE basis. This is a company that is expected to do around $2.30 per share of earnings this year versus $2 this past year. They're expected next year to do around $2.60. So right there you see there's very nice growth expected in the earnings per share, and I love when the earnings per share is moving up. If we look here as far as the revenues go, revenues in the current year are expected to grow around 15%. Now, it's a little better than what it really should be because of some foreign exchange tailwinds, basically kind of pushing up the numbers a bit, but still strong revenue growth no matter which way you look at it. And then on a next year basis, they're expected to grow close to 8% revenues next year. So very, very nice growth in this company, especially for a company that's as big and I can say relatively safe in a sector like they are, and at a 16.5 forward PE. It's looking pretty good there. And then we look here, and they just in January authorized another $6 billion share repurchase program, guys. Another $6 billion they're going to be able to purchase shares. Basically, when a company has a big share purchase on like this, one, it puts another buyer out there in the market to buy shares, right, which generally just elevates the price. And then 2, also from the perspective of the more shares they take off the market, the more that EPS number is going to look better and better because there's less shares to be counted against when they have that net income come in. So as long as their net income can continue to rise, then they're taking shares off the market. It makes EPS go up at an even faster rate, guys. So eBay, pretty simple investment. Now, my most simple investment is my 3rd biggest investment right now. This is in Goldman Sachs, the best run investment bank in the world by far, in my personal opinion. The only banking name I've ever been invested in. I absolutely love this company and their business model and whatnot. So this investment is unbelievably simple. They're trading at an 11 forward PE on this company, okay? I'm getting the best run investment bank in the world, what I feel is in the world, right? And I'm paying an 11 forward PE in it. In this type of market, guys, that's ridiculous. That is ridiculous, okay? If we look here, they're expected to do somewhere around $21.55 in earnings per share this year, in this current year, right? That's versus $19.76 last year. And then next year, they're expected to do just under $24 in earnings per share there. If we look at the revenues, I expect to do just over 3% revenue growth the current year and around 4% revenue growth next year. So it's a very simple investment, guys. This is a company that they benefit from IPOs. Generally, whenever a company goes public, they're going to probably use Goldman Sachs as one of their underwriters. They also benefit from market volatility. We've seen the markets be volatile lately. That's more for their trading business. They benefit from more wealth being created out there. They have huge wealth management side of their business. This is a company that just benefits all the way around, no matter which way things are kind of going, they find a way to make money off of it. And at an 11 forward PE, it's such a simple investment for me. It's almost a no-brainer, guys. That's why they're my 3rd biggest investment. My 2nd biggest investment is a little more complex, and that one is Cirrus Logic. So if you do not know, Cirrus Logic makes semiconductors that go into smartphones and things like that, tablets. They also are in some other products, but mainly they're a smartphone company. Apple is their biggest customer by far. It accounts for around 80% of their revenue. So a huge customer of theirs is Apple. Cirrus Logic right now is trading at a forward PE, once again, of 11, okay? Very similar to Goldman Sachs, trading at a forward PE of 11. Now, part of the reason why it's trading at a forward PE of 11 is because Apple is such a big customer of theirs that a lot of people, when they look into the stock, a lot of fund managers, when they look into Cirrus Logic, they say, okay, is this one we want to get involved with? Because what if they lost Apple? And that's always a possibility. That's always a possibility when you are in Cirrus Logic with how dependent they are on Apple. What if they lost Apple? That's always a risk, and that's why I will always trade at a generally lower PE than most semiconductor stocks. However, on the good news front, they have a great opportunity to win Samsung back as a full-time customer starting in 2019. Now, they might not win Samsung back as a full-time customer. Right now, Samsung accounts for some revenue that comes into Cirrus Logic, but it is not a huge amount. If they can win Samsung back as a full-time customer, there's a few things it does. One, obviously, would be their revenues would go way up, their profits would go way up. Those are great things. But I think even bigger for the stock is the fact that they can diversify revenue more. If Apple went down to, say, a 60% or 50% revenue number, and it's not because they lost a bunch of Apple business or something, just because there's more Samsung business came in, that would be a huge thing that investors looking into the company would say, okay, they're getting 50% of their revenue from Apple, but they're getting another 40% over here from Samsung and then 10% from all other customers. Then more people start to look into it and say, okay, I kind of like this one, all right? Then if we look at the balance sheet on this company, right? Phenomenal balance sheet. One of the best, the best balance sheet I'm invested in, let's just put it that way. $226 million in cash and cash equivalents, $12 million in short-term investments, $173 million in long-term investments, and they have no debt on this company, guys. No debt at all. So an unbelievable balance sheet, and that's the type of balance sheet you really want when you're in a semiconductor space, just because it's a riskier space, right? So then if we look here, they got a big buyback going on. Over the past 5 years, the company has utilized $292 million to repurchase 9.1 million shares. In the December quarter, we used roughly $20 million to repurchase 363,000 shares at an average price of $55. Cirrus Logic has $60 million remaining on our October 2015 share repurchase. Further, the board of directors authorized the company to repurchase up to an additional $200 million in company stock. So same things that, you know, a company like eBay or any company that's doing a share repurchase puts another big buyer in the market, right? And on top of that, they're obviously taking shares off the market, which generally makes that EPS number. Now, management was purchasing shares at $55 a share, right? The shares right now are 44 or so. I'm pretty sure management believes in this company a lot in the future if they're willing to take shares off the market at $55 and prices around there, guys. So and not all the time is management correct in their share repurchases, but I'd say generally this is one of the best management teams I know of any company out there, guys. They're a phenomenal management team. Something I want you to take a look at here is this is their growth in headcount, basically, okay? So you see back in, let's see, back in Q3 2016, they had about 1,248 employees. Currently, this past quarter, they're up to about 1,568 employees. So they're obviously adding employees heavy right now because they have so many products they can go after, so many different, products. And a friend of mine, who's also got a small investment in Cirrus Logic, he's always saying things like to me like, why don't they get in this product? They're not in this product. They're not in this. They're not in this device. Things like that. And I'm like, dude, it doesn't work like that. These are very specialized workers. This isn't like I'm going to hire baggers at the grocery store or something. These are very, very specialized workers. So each worker is very important to the company. So the fact that they can add 300 of those type of workers in a really a 2-year span, that speaks volumes to the company. And they're going to be able to do a lot more things with that company. Because a company like Cirrus Logic, that's a smaller company, I would say at least half of their employee base, if not more than half, is probably dedicated just toward Apple and trying to do things specifically for Apple and whatnot, guys. So as they build this business up and they have more income coming in and whatnot, they're going to be able to hire more and more employees, get a bigger employee base built up, and go after more and more products, okay? Now, something else I want you to take a look at here is this paragraph. In the March quarter, we expect revenue to range from $300 million to $340 million, down 34% sequentially, 2% year over year at the midpoint. Guidance for the quarter reflects continued weakness in demand for portable audio products. Based on the current visibility, we expect revenue for fiscal 19, so that's this year, to be relatively flat year over year. Okay, so not really expected growth this year we're in right now. Nonetheless, with a substantial portfolio of components and a solid product roadmap, the company is actively engaged in design activity with many of the leaders in smartphone, digital headset, and smart home markets. Based on these activities, we anticipate a return to growth in the calendar 2019 timeframe. We are optimistic about our future growth potential and believe the company is poised to capitalize on these opportunities over the next several years. So, If you ask me what management team do I trust more than any company, literally of any company in the world, I would say Cirrus Logic. I've been following this company for a long time, been in and out of the stock a few times. I would say the management team over there, they're highly competent and they usually don't overpromise and underdeliver. That's very rare that they'll do a overpromise, underdeliver type thing like, oh, we're expecting growth in fiscal 19 and then we don't have growth. Like, this is not a company that usually does things like that. Usually if they say they're going to have growth next year, they're probably going to have growth next year. It's possible they're wrong, but usually with these things, they're usually working on devices years out. So generally they know, okay, we're working on this device, we're working on this device, we're going to be in this next phone coming up, blah, blah, blah. Usually they can see years out into the future and whatnot. So it's possible they could not maybe get to growth next year, but I would say probably unlikely based upon what management's track record. Next one up here, my biggest investment of all of them revealed here is Callaway Golf, all right? So at first this might look like a little bit of a sleepy company, right? Forward PE about 19.5, and obviously they're a golf company, but what people don't realize, well, most people out there, they got a 15% ownership stake in Topgolf, guys. We see Topgolf expanding all around the world. If you've never been to a Topgolf, go to a Topgolf sometime if you have one in your city. It is amazing, and next time you come out to Las Vegas, make sure you go to Topgolf. You might see me posted up there, guys. It is absolutely amazing places. Basically driving ranges. Some of them have pools. I know the one here in Vegas has 2 pools, bars, restaurant, just a fun time, just a great time, awesome place to be and whatnot. So they got a 15% ownership stake in this company, and it's a company that could possibly IPO within the next year or two for several billion dollars. This is a big money maker, okay? So that's a very exciting. That doesn't show up in the PE numbers or anything like that. And then if we look here, last year they had about 53 cents of EPS. This year expected to do about 70 cents, and next year they're expected to do around 79 cents. If we look at the revenue here, in the current year they're expected to have around 8% revenue growth, and then next year they're expected to have around 5% revenue growth. I think those numbers are a little conservative in my opinion. I think golf really bottomed 2014, 2015 into 2016, and is really on the rebound now. I think viewership numbers are going to go up on golf tournaments. Basically, when that happens, generally it gets even more people out there golfing, interested in products and things like that. Tiger Woods being back on tour is massive in my opinion in terms of garnering attention back to golf. I mean, Tiger in this last tournament, I think he placed 12th place. I watched almost the entire tournament. The crowds were crazy. It was on the front page of the ESPN app. Like this just brings more attention to golf, and is really good having Tiger back in that, and just golf doing much better in general. They got phenomenal products. I think those estimates are a little conservative in my opinion. We shall see. And then if we look at the balance sheet, 80 million or 82 million in cash. Then they got another 50 million in long-term investments. That's quite a bit of money there on the balance sheet just in investments in cash for a company of Callaway's size, guys. So those are my 4 biggest investments. I hope you guys enjoyed. Let me know what stocks are your biggest investments right now. I would love to hear from you guys. As always, in that comment section, make sure you follow me on Instagram or Snapchat. Links are down there in the description, especially Instagram. Thank you for watching, guys, and have a great day.